It's been a day of wild swings on Wall Street. Here's where the market stood just a few minutes ago. The Dow was down 363 points at 8,215.99. So what should you do with your retirement savings as the market deals with all this turmoil? Joining us now, Senior Financial Advisor for Ameriprise, Blair Pritchett. Thank you so much for joining us. Thank you so much for coming to calm some of our fears. You know, if people running around in our own newsroom wondering, should I look at my 401k? And when they do, they're a little depressed there. Should they panic? Should we panic?
Well, first of all, I want to tell everybody, put the scissors down, put the shoelaces down, come off the ledge, you know. And the reason I say don't panic, I'll go into in a minute, but let's don't panic and let's just remain calm about the whole thing. And I'll tell you why. Number two, if you're concerned about your 401k or your IRA, excuse me, and you need to seek professional advice from someone you trust to have them give you a second opinion about your portfolio to make sure it's right for your goals and your risk tolerance.
We see the numbers fluctuating, going up and down. Put this into perspective for us. What does a bear market mean?
Sure. A bear market, a lot of folks think, and a lot of investment people think, is a decline of 20% in an index, such as the Dow or the S&P 500. And that might well be true, but I want to realign folks' definition of what a bear market truly is. A bear market is a period of time in the market where folks who think it's different this time sell their stock investments at a panic rate to folks who understand that it's not different this time. It's the same as the last bear market, and the last bear market, and the last bear market, and I'll tell you why. We've had 12 bear markets since World War II, and on every one of them, the value of all these indexes that I just mentioned was higher after the market was over. That's 100% now, not 98. It's 100%. That's pretty good. And let's talk about the last one we were in. Remember 2000 to 2002? That was a very bad market. Starting with the internet bubble, stocks going down, we had a bad recession, and then 9/11. I mean, that was 3 weeks where the United States was just basically shut down. Those were dark times. So the market sold off, and the pundits thought it was going to go way, way down. It didn't.
So in essence, this is a repeat performance, and if you can, just wait it out.
This is the same. It's different circumstances here with a credit crisis, but it's the same investor behavior because people's behavior hasn't changed much in the last 1,000 years.
And if you're worried out there, pick up a phone and call a financial expert.
Right, somebody you trust. Now, I wouldn't go to the phone book for that number, but I would call around and see who your friends and relatives have trusted over the years.
Mr. Pritchett, thank you so much for your perspective today. We have information about financial help on our website, myfoxatlanta.com. You can check stocks and get money-saving tips. We also have information about consumer counseling services.